Hey, good morning, everybody. Apologize for being a little bit late. The donuts are really good, so had to finish one more. All right, welcome to Monday, May 22nd, 2023. Man, I'll tell you, trading's getting fun again these days. Last week was a terrific week. Whoops, what's going on here? There we go. Was a terrific week, and I expect nothing less this week. We just have to be on the right side of the trade. A magical little trick to trading, isn't it? To be on the right side. Good morning, Bob, Julie, Thomas, JW, Elmer. How you guys doing? Whoops, I'm still getting a program up and running. There we go. I'm cool now. Okay, so in my opinion, we should just simply focus on the trend. I know that there is lots of concerns ahead of us. I know there's a lot of reasons for the market to tank. I received a lot of information this weekend, email stuff, reading what other people are talking about, watched a lot of news, went back, got caught up on a lot of things. And there is that chance, and I don't want anyone to think that my head is stuck in the sand. It's not. I know that I've been predominantly bullish, but I do recognize, man, we could come way down here. We could come crashing down big time. We could come down and test all this level down here. We absolutely could. And we could have done this on any given year. Any given year that could have happened. And I'm not saying it's not going to happen. All I'm saying is let's just follow the trend. The trend will tell us everything we need to know. Now, for those listening in here in the room, Hit and Run Candlesticks, we're swing traders. So what does swing trading mean? Well, let's do this. Swing trading is simply, where does it go? There we go. Swing trading is simply entering in. I'm going to make this a little bigger. There we go. Swing trading is simply allowing a trend to start and then watch for the pullback and swing. And by the way, it could be swung right here too. That's all. That's what swing traders look for. Swing traders look for swings and then profits. Swings and then profits. And it's the same true with the bear side. Swing with profits. Swing with profits. Now, there's nothing wrong with taking some profits off and holding on to this and allowing, more money to be made. There's certainly that is a absolute way to look at it. Another very absolute way to look at it is take the swing, take the profits, and wait for the next sell signal. Because what could happen here, it's possible that this is where the bulls get going. I mean, they got going right here, so why couldn't it have been right here? So really what I just want to share is follow the trend, long or short, bullish or bearish, good times, bad times. Just simply follow the trend. Now, you've all heard the term stock picker's market. Well, this is truly a stock picker's market. You can trade long and you can trade short and make money. When the market is crazy, crazy, crazy bullish, maybe like this over here, just insanely bullish, that's not really a stock picker's market. I know that term is thrown around a lot. It's a clever little term that you can just, toss out there. It's cute, makes you feel better, that sort of thing. But when the market is super, super bullish, that's not necessarily a stock picker's market. A stock picker's market is when you can have short positions on and long positions on, and you make money on both of them. Now that's a stock picker's market. That's a market where you have to evaluate the chart, trade what you understand and what you know, trade with the current trend. It's my opinion, whether you're long or short, trade with the trend. Picking tops and picking bottoms is just, I just don't believe it's a winner's game, at the end of the year. Consistency is with the trend. So whether you're short or whether you're long, roll with that trend, okay? Anyway, that was probably a little bit longer than I should have hung out on this particular topic. Sorry about that. So let's take a look at the market here. I think the SPY is still bullish. Now, the reason I think it's bullish is because that's what the trend is doing. And you can see right here, let's see, make that blue. You can see right here, you have a low, a low, a low, and a low, all going higher. That's the sign of a trend. I use these green dots, red dots, to help me with my trading trend, okay? For, the overall trend of the market, probably best to do something like this to get a picture of that. No matter whether we move up or down or sideways, this is how you would pick out those lows, and you can clearly see there's a trend. The red and green dots is what I'm going to use for my trading trend. So when I see those red, green like this, price above the T-line above those dots, that chart is bullish until it's not. And just the opposite, when I start to see price below the trendicator's red, and T-line rolls down, that's when my trading trend is bearish, okay? All right, with that, let's look at a few charts. I had a few over here. Let me move this out of the way. And let me get this out of the way. There we go. A few longs and a few shorts. Now these I'm setting up, putting them on the watch list, and then in my watch list I have different things that I'm looking for, like a 3/8 trap or a breakout, some candle signals maybe, wedges, flags, things like that, both long and bearish. I've got some bearish charts here we'll look at. Pretty sure I do. So this is one coming up on that 1750 trap that we talked about last week, did that video on for the members. And members, you can go to that video and review it if you like. So nice little rounded bottom here. We are clearly still in a downtrend. So on a case like this, I'm simply looking for a swing. Now what I want is a trendicator to turn green, and what that's going to do is start my trading trend. So from here, I'm looking to swing this to the 50 period moving average. That's this particular trade right here. It can certainly go higher, and if it does, if it closes above the 50 period moving average, it's another strategy for us. But right now, it's just the watch list. Hasn't done anything spectacular yet. DPST, this is one that a few of us here at Hit Run Candlesticks have been holding. I like the idea of this morning waking up and seeing a little bullish activity going on. Here we've got this low, high, excuse me, low, high, higher low. We've made that higher high. We went up there and our dot got a little green, and then we consolidated. Now back to a little red, which that's okay because the chart pattern is holding shape. Here we are above the T-line. We're set up in a nice little flag. I'm going to move this down to the 50. There we go. We've got about 30% to that 50 period moving average. And we're already holding it. A few other people are already holding it. So let's see what happens there. Nat gas. Damn, excuse me. Nice little move up here so far. You can see how we've been down. So let's go ahead and put that down in. We've got a trend break here. We're above the 50 period moving average. Now this is too high for me to chase, but it doesn't mean that I don't want it on the watch list, because I look at charts like this and I can put it on the watch list and be patient because I see the upside potential of maybe $4.20, and who knows, maybe check out this 450 again. So it's not likely, I mean, it happens, but it's not a common thing where we go up and up and up and up and up. Oh darn, I missed it. This happens, but not enough where you have to chase. What typically happens is at some point in here, it's going to rest, it's going to relax, and price is going to dip down. And when price dips down, that's where we're going to start shopping for our entry. You see this right here? There's a swing. There's a swing. We're looking for another swing. So the swings are bought what I feel is the best time for the swing. So the PBO, we pull back opportunity. So we don't have to chase. We don't have to, oh my gosh, we're hurt, we're missing this, I have to get in. Nope. Let's wait for the pullback. You get another chance. Let's look at a short here. eBay might be setting up for a short. It's too bad because it looked a little long right here. And it doesn't mean it can't get long again, but what it is going to have to do is change its attitude right through here, is what it's going to have to do. Right now we have a broken downtrend, a broken uptrend. We're below the 50 period moving average, and the 200 trend indicator has turned red. We're setting up for a bearish H pattern. So I'm watching this real closely for a short to the downside. Of course, if it was to change, there's nothing wrong with moving into the long position on it. But right now it's pointing to the short side. MGM is a nice looking short. Blue ice failure, for anyone that's familiar with that. In a nutshell, it's failure of the 50 period moving average. So here's MGM, a couple things I like on it. I like that double top. I like the trend indicator being green. I like it that we're below the 50 period moving average. This is actually a 3/8 trap short right now. And if we look at the 200 as a target direction, you're looking at between 9 and 10% on that. So MGM is on the short watch list. XLR might be another one. I thought there was oh yeah, there's another one. XLR might be another one setting up. See how it's rolling over here right at the 50, the dotted deuce actually rolling over. So we start to see weakness below these lows, about 36. Well, that just might pay off pretty good. XRT is another one looking a little short. I'm going to take this to a weekly chart. And if you look at that, we're below the 50, the 200, and those are all important to me. And if we break through here, the next level that seems really supportive is down here about 46. Oh, there's some bounce areas in here, no doubt. But the best supportive area that I can see is maybe around 45 maybe. I mean, it could slip lower here, but let's try that first. Another one, which I shorted this one Friday, ABNB. The reason I shorted that was you can see this top here, and honestly, I would rather draw it more like this. So you can see that we're popping down. Now this came up on our gap and trap scan, and that's where we gap and then we set up for the trap. And the trap would be the 3/8 trap. So gap, set up for the trap. And what this is what we're looking for anyway, is a continuation. Gap, set up for the trap, and then continue down. And that gives us an entry area. And that's what I think the 3/8 trap is. It just shines over everything. An entry mechanism, one of the best. Okay, with that said, let's see. Some charts we might want to keep an eye on for the long side. You know, MU is doing the right stuff here. It really is. I'm sorry, Intel. MU's going to be the next one. You know, yeah, we're butting up against a speed bump right here, but we're also putting in a double bottom. So what we've got now is a let's wait and see. Now, this is not a buy. And hey, I want to stop right here. Anybody that's following the little pre-market webinar here, you know, any chart we look at, there is nothing that's a hurry up and buy. What it is put it on the watch list and let it come to you. Bait it. Let it come to you. Let it do what you want it to do. So I look at this, I see the potential. And, you know, for Mr. Bear out there, you might be looking at this potential, and you're right, absolutely. Mr. Bull out there, you're looking for that potential, and you're right. And it's not the breakout or the immediate breakdown where you're going to make money. What it is the follow through from the breakout or the follow through from, you know, from that breakdown. So we never have to be in a hurry. Plan our trade, trade our plan, and always take a breath. Always take a breath. All right, I apologize for being a little late in here this morning. I'll see everybody in about 20 minutes at the bottom of the hour. And let's try to have some fun today. And that means making money, because it's always fun making money. We'll see everybody in about 20 minutes. Thank you.